right, here we are with Nenad Palinkasevic, co-founder of DeFi Saver. It's great to have you here at the Defiant. Really interested to learn more about the DeFi Saver story and what you guys are up to. So welcome.
Yeah, thank you for having me.
Awesome. So, DeFi Saver has been around for quite a while. I think you're one of the first DeFi projects out there. You started out at CDP Saver originally, I think, to handle kind of maker positions and have expanded from that there. So I'd love to hear more about the founding story, and then we'll get into kind of all the latest. So just to get everyone on the same page, if you can just explain what DeFi Saver is and what it does.
Yeah, so basically what DeFi Saver is we're an app. We're a DeFi management app. So we have different protocols like Maker, you mentioned, and Liquidity and Aave and so on. So we integrated all of the main Ethereum protocols, DeFi protocols, and we aggregate them into one app. Besides just aggregating them, we provide a bunch of other additional features like liquidation protection, one-click loan shifting, so moving your position from one protocol to another, basically providing like advanced actions in simple steps. So a lot of times people actually call us like a power tool or like something, some app where you can access all the protocols you use, but also have like a bunch of advanced features to make it easier to manage and to properly kind of control your positions.
Awesome. So we'll get into more details on those features and so on. But first, let's go back to the founding story. How did, and if you can include maybe your background, like what led you to starting DeFi Saver, and how that turned out, how that was like.
Yeah, so I have a technical background. I think that's like most of people in Ethereum, they do have some sort of a technical background. I was a coder, kind of doing full stack development. That quickly, I guess, became a bit boring. I was starting to get more interested in finance and looking at different things. So around like 2016, 2017, I started to looking into the crypto space a lot more. Started reading like Mastering Bitcoin and Mastering Ethereum, really, really good books. So I started to kind of technically go into the whole blockchain industry that was booming at that time. And I quickly stumbled upon Ethereum and really liked the developer platform, and that's something that I could build apps on top of blockchain. So and essentially that's how the company was founded, from that idea. At first we were a R&D center, so research and development, because Ethereum was so young. There weren't really any like live use cases for it yet. So we were experimenting and trying to build a bunch of different dApps and to see like what works on this new technology. So one of the projects was CDP Saver, right? So we had a bunch of different like experiments and projects. One of those projects was CDP Saver. It is a quite interesting story how we started, because I was actually like a early MakerDAO user in like 2017, 2018, and we were all in Thailand on a vacation trip. So I actually like sponsored part of my vacation and traveling to Thailand with the Maker CDP, right? So I deposited some Ether and I could get some DAI out of it. Nice. One bad thing from it is that I did not expect that one of the biggest Ethereum crashes was happening at that time. The price of it went to I think $70 or $80. And I was outside riding like motorbikes in the jungles of Thailand. So I wasn't paying too much attention on the price. And I didn't get liquidated, but I went back home and I saw that my CDP almost got liquidated, right? I was like a few dollars away from liquidation. And basically that's how the idea started, because I was thinking, okay, I'm a developer that's working full time on Ethereum. I'm somebody that's online almost all the time. I'm someone that checks the prices and knows the technology. But even for me, it was hard, right, to not get liquidated, to manage my position, to kind of keep everything afloat while I was doing it. So we started kind of realizing that we do need better tooling, and we wanted to first, like, the idea was to create some sort of tool that helps users protect from liquidations. But while we were building that, we realized, like, okay, definitely it's not just one problem. Like the UI and kind of the user experience needs to get a lot better. So we started building something called CDP Saver, which was kind of a dashboard for Maker that had those like advanced liquidation protection and like one-click repay, one-click boost. So kind of aggregating what then was DeFi into one app and providing like a good user experience and more advanced options. So yeah, I guess that's the gist of it.
Nice. So the idea was to make it easier for people to avoid being liquidated and just more generally access Maker. And I guess from there, how did that evolve into more broadly DeFi Saver?
Yeah, so around that time we started working on it. I think like the whole term of DeFi was being coined on one of those Telegram groups. So basically, back then there was maybe Maker and a few other companies. I think like Compound had version V1, and a few other protocols were kind of like 0x was doing exchanging back then, and Kyberswap. So we quickly realized, like, okay, this is Maker is just one part of a bigger puzzle, and that puzzle is DeFi. And we saw like all the interesting developments going on. So we quickly realized, like, okay, we actually want to integrate the different exchanges. We want to integrate stuff like Compound. So we moved from being strictly like a Maker dashboard to being a DeFi dashboard. So that's why we moved the name from like CDP Saver to DeFi Saver, to kind of signalize that we're doing now like the whole DeFi ecosystem, and trying to. It's actually kind of an interesting point, because when you only have one protocol, obviously there's kind of a limited amount of things you can build on top of it. But one really cool thing about Ethereum and DeFi in general, like everything is open source and like transparent, so we can kind of easily implement other protocols and then kind of combine them together. And I mentioned like loan shifting and stuff like that. So you can kind of easily combine different protocols and create kind of a more powerful tool.
Awesome. So there are other applications that are attempting to do somewhat similar things. Just like facilitate access to DeFi. So how do you differentiate from them? Like,
Yeah,
what
yeah.
makes DeFi Saver special?
Yeah. So I guess it's like most things, it's a few things, not one thing that kind of differentiates you in the market. One of the things we mentioned, like we started early, so we built a lot of trust with the users, with the like OG DeFi users that started early with us. It was a growing experience, so we obviously over time kind of learned a lot and kind of increased the quality of our outputs and the quality of the product. So I guess kind of it's kind of, everybody says that, but we are like user oriented. We are someone that we are like DeFi users ourselves, and kind of using that path that worked for us in the beginning of like solving our own problems and kind of finding other people that have similar problems. So we go from there. Like we generally don't try and rush and integrate everything, but we try and curate like a really good list of protocols and features that we believe are kind of beneficial to the user. So, and kind of having all that tied up in a good UX and a kind of quality work, that's something that we're proud of. The second big thing I think I would like to mention is the like automation part, or we call it strategies. But that's something that I think we're one of the first in the market to actually build like a decentralized strategy / automation. So when I say like stopping liquidations, we're not doing that like centralized, or we're not doing that custodial, right? So we build a system of smart contracts which we don't have access to the users' funds. Users' funds are still at the users' wallets, and they have still full control. But we have a system of smart contracts that can monitor the blockchain and execute specific actions that the user approved. So I think kind of leading that sort of automated the liquidation protection, different DeFi strategies. That's something that we started like 4 or 5 years back, and are still kind of one of the largest features in the product.
Awesome. Can you get into some of the features you offer? Like what are some of the strategies that people can do?
Yeah. So one of the most common strategies, and one of the first strategies we ever implemented, is that repay strategy, right? So just a quick TLDR, users can get liquidated on their DeFi positions, right? So if the price falls low enough, the collateral they put in is gonna get sold on the market. That's something that's not kind of the best option for the user, because most protocols, they will sell all your collateral. There's going to be a fee associated with it. It's going to occur a lot of losses for the users. So the first strategy we built was to create a automated repay. So the user can put their own kind of parameters when the price falls and their position is kind of more risky. They can sell just a portion of their collateral, and we aggregate all the different on-chain exchanges, so they get a really good price. And so we can repay just a small portion of their position to keep them safe without incurring all different losses. Obviously, that was the first strategy. We probably have now over like 50 different strategies, like stop loss or take profit, or like trailing stop loss. Even some like fun strategies like DCA strategy. That's obviously good when the price is down. So because we have a large collection, I guess, of different protocols, we have a lot of different strategies, usually dealing with kind of managing the position safely.
Nice. Okay, so over 50 different strategies, and how many protocols have you integrated?
Yeah, I'm actually really bad with numbers, but I would say probably like 10 plus protocols. We have all the major ones. I guess we can count even stuff like Lido and different decentralized exchanges and so on. So we do have a lot of like everything basically that's kind of been a long time in DeFi, and it's kind of proven to work. We have it at
Got it. Platform. And so far, it's just for Ethereum-based DeFi?
Yeah, I guess I would say like from EVM, because we do implement L2s as well. So we have Arbitrum, Optimism, and Base L2s. Obviously, the L2 ecosystem is booming, so probably gonna add some more like L2s in the future. So, but we are kind of strictly oriented in the Ethereum ecosystem, right? So the Ethereum mainnet and all the bigger L2s around, and that's one of our big integrations was moving usage to L2s, because we are doing like advanced strategies and advanced actions. They do cost a lot of gas, so we were very sad when like the gas prices rises and Ethereum price rise. Obviously that like prices out some of our users during the past. Now when we have like stuff like Arbitrum and Optimism, it's really cool to see like smaller users having the access to all our features as well.
Awesome. And speaking of L2 fees, what did you think about the Dencun upgrade? How did that impact you and your users?
Yeah, we actually like love the latest work. one obvious win was the blobs, right? So the L2s, especially even for us, because like I mentioned, the transactions are more complicated. They have a lot of call data in them. So even on L2s, sometimes they can cost a few dollars. Now with the blobs, I think the costs are like 10x less. Obviously, that depends on the gas cost and everything. But in general, I think it got the gas cost on L2, it got a lot. One thing I actually like about Denkun, not just with the blobs and the savings, like even the technical EAPs, like with the transient storage, that's something that's going to help us kind of build a better code base and save some gas on L1 as well, right? So I would generally say the latest work was really good for us, and in general for Ethereum, it was kind of a bunch of smaller improvements and one really big with the blob and the gas fees on L2s.
Awesome. And did you find now with the lower gas costs, there are actions that maybe you couldn't do before, but now you can? Like, have any new strategies opened up?
Yeah, I guess we're kind of waiting to see how the whole blob thing plays out. Obviously, it's still new, so we're gonna see if the gas reductions are gonna keep being so low. For L2s, I guess the gas was never too much of the worry because even before the latest EIP, the gas costs weren't that high. So no really like dramatic different strategies from us, but it's really cool to see that like some strategies that are simple, like a limit order or even a DCA or some simple strategies like that, now they can work with users that have a lot less money and they don't have to worry about gas fees. Because one thing about the L2s, they are really cheap even before, but when the gas spikes on L1, obviously even the L2s can get a bit higher. So now everything is kind of lower, and we are really glad to see, like for instance on Arbitrum, now we're kind of seeing we have even more like enabled strategies on Arbitrum than on the mainnet, and we see a lot of users on Arbitrum and on L2s in general. So it's cool to see like a lot of different users kind of being able to use us on L2s because of that.
Awesome. And can you talk more about your users, like stats on a number of daily or monthly users, or whatever is the right measure? And and any insights you can give on kind of how people are using DeFi.
Right, yeah. So in general, we do try and not track a lot of info about our users. That's one thing we're trying to do is to kind of respect the privacy. So I don't have a lot of like detailed information about the users because we generally don't track them. Obviously, we do follow what's going on. I guess the amount of users and we can see the like rapid growth in the TVL in our like automated strategies, that I think it's over like 500 million right now. That rose a couple hundred million in terms of months. As far as the users and their actions, obviously during like a run like we're having right now, users are generally using like lending protocols to leverage. One interesting use case we are seeing more and more is the liquid staking derivatives. So a lot of users are kind of doing different options of like looping liquid staking derivatives on Aave and other protocols. We see people even doing like funding rate arbitrage between the spot markets and the perpetuals. So we see a lot of different usage, but it's during like I'm not going to say a bull run, but during like an uptrend like we have now, usually people are more into like trading and leverage trading using money markets. But obviously in DeFi, there's a lot of different like strategies to earn good yield and to stop without taking too much risk on price.
Awesome. Okay, so leverage, doing loops with liquid staking tokens in Aave and money markets.
Yeah.
And how does that compare with the bear market? Like, what were people doing more then?
Yeah, during the bear market, I guess, obviously people are always gonna do some sort of trading, I guess. Um, I think strategies, like I mentioned, like a DCA strategy, is maybe something that kind of the more experienced users during when the price is low, they actually want to have a strategy to accumulate more
Right.
money. During the last period, the rates weren't so high, so I feel like a lot of people were trying to loop something or use different protocols to get like a good yield on their assets. And that's something we saw like beginning of the last year, like when people had the ability to stake Ether and then use that staked Ether in the DeFi ecosystem. We saw a lot of different kind of DeFi alchemy going around and people building all sorts of positions where they can earn good yield or even kind of now the rates are pretty high, but like a good usage was to have a liquid staking ETH derivative as collateral and then borrow some sort of DAI or something, and you will pay like very little or almost have positive interest on your position because like you're earning yield on your collateral. Like
Oh,
that's
interesting.
something we saw a lot. Yeah.
Awesome. And now with, the big thing is like airdrops and points. Do you have strategies to optimize that?
Currently, like for airdrops, obviously, because we're building in a lot of different protocols, some protocols give away the tokens and airdrops and have some sort of point recollections. We didn't really jump on the whole latest points craze too much. I think we're trying to see like what stuff is legitimate first. Definitely, I think there's some value there. So we do have a lot of like even newer protocols like Morpho. I know they have some liquidity mining programs and Aave has now a liquidity mining program and so on. So our users are exposed a lot to different liquidity programs. We haven't jumped on the whole points craze yet. But I think there is a lot of like legitimate protocols that have some sort of a point system, and we're not opposed of integrating them and using that as like leverage, I guess.
So if you were to jump on kind of the airdrops and points craze, how would that work? Like, because are you like technically executing actions for your users, but
Yeah.
I would guess like you're using your own wallet to do that. So like, would
Yeah.
the airdrops or at points like come to your wallet first and then you would distribute it to the user?
Yeah,
Or
generally, no, I don't think that really happens for us. It's kind of a technical point, but we can go into it. As I mentioned, because we were building with MakerDAO early on, most of our users, when using DeFi Saver, they have like a custom smart wallet. That smart wallet is a DS proxy. That's the smart wallet that MakerDAO was built in like 2016 or 17, and we started using that. So each user has their own wallet, and the position they have on Aave, Morpho, and so on, it sits on in that wallet. So usually when the user has some sort of rewards or when we do a action from the user, they only give us access to, like they give us our smart contract specific access to call a specific function on their smart wallet. So that's kind of the main point is users have a kind of custodial, they have kind of access to their own money in their smart wallet, and we don't really have access to it, and they get all the rewards on their smart wallet or their EOA.
got it. Okay, so when interacting with DeFi Saver, you will have your own smart wallet associated with your, DeFi Saver strategies, and then that wallet is going to perform all the actions and receive any rewards or anything that might be associated with it.
Yeah.
Makes sense. And I saw recently you started using Safe. Is that the partner you are using for the smart wallets?
Yeah, so that's something that we're gonna release in the next few weeks. So, like I mentioned, the main smart wallet we're using currently is DS Proxy, the maker-based smart wallet. Uh, in the past, I guess 6 months, we were researching on how we could upgrade that wallet and kind of provide additional features. We were looking at what kind of, because the DS proxy is kind of, I guess, an old wallet built in 2016. So obviously the industry has evolved. And so we were looking at technically what sorts of upgrades on the wallet side we can provide for the user. One of the kind of the best solutions we came up with is to not really reinvent the wheel. We were looking at the Safe code, which is really good code base, open source. It's kind of it's modular and kind of easily. There's sorts of add-ons you can extend the ecosystem, and the ecosystem is obviously one of the largest. So that was kind of our decision to actually slowly move away from the DS proxy to integrate safes as like as a first-hand citizen in the DeFi Saver ecosystem. And we know a lot of people have like different safes and they use it as a multi-sig, which we do believe is kind of the best way from a security aspect to actually use DeFi. So we're kind of really glad to move more into that kind of multi-sig space and to integrate something that's kind of already popular and widely used. So users are not really like locked in with us. If you obviously have a safe and you use DeFi Saver, you can go to the official Safe app if you don't want to use us anymore, or you can go to any other app and use your safe from it. So we really don't want to like lock in users in some sort of like proprietary wallet or something that they can only use it with us. With like the safe ecosystem, we believe it's kind of a really good way to kind of have advanced security, have a bunch of additional features, and then kind of use kind of a standard in the industry.
Yeah, that makes a lot of sense. And, speaking of how DeFi has really evolved from 2016, 2017, and you've been through it all from the very early days. So I'd love to, I don't know, see your thoughts, get some insights from you on how the ecosystem has changed over time.
Yeah, definitely. I think like the main thing is definitely grown a lot, and I don't think just in like the TVL aspects and in the amount of users. It's grown as the industry, as like the practices and the security aspects and the quality of the projects we're seeing now is getting much better. We were definitely at the beginning at some sort of a prototype research phase. So there was a lot of, like even now there are some obviously DeFi hacks and there are some protocols that fail and so on. But we do see that like there's a lot more like really good developers and really legitimate projects actually like innovating. And we were kind of at the beginning, I almost feel like we were trying to emulate the TradFi system on top of the blockchain. But now you can see that we're kind of moving past that. Like the current apps are not just a replicate of what you can do in a TradFi system. They're actually something that they're going above that, right? They're something that are blockchain native and they provide a lot more features and a lot more than just your regular bank account or like a trading app.
That's super interesting. Okay, so I guess, right, at first we had Maker, I think, was the first DeFi protocol, and that was kind of like the DeFi central bank issuing DAI, allowing collateral-based lending. Then we had DEXs with 0x, Kyber, Uniswap. So that was, like decentralized trading, but still trading, still similar to TradFi. Then we had Aave Compound. more kind of lending, borrowing with collateral. And what do you think kind of the next generation has been? I guess like staking based apps would be the thing, probably, like liquid staking, restaking, like all these things, or yeah, what else are you seeing is kind of these apps that go beyond TradFi?
Mm-hmm. Yeah, definitely, like the staking, the staking and the liquid staking, when Ether moves from proof of work to proof of stake, that kind of provided a whole kind of inflow of yield that's reliable and consistent, and you know where it's coming from. So all the projects kind of innovating on top of that kind of shows you the power that you can build a sort of like a simple primitive like a proof of stake protocol, but then the like all the DeFi Lego blocks can build all different like financial instruments on top of it. I guess we kind of are seeing also, if you look at, you mentioned like different DEXs, like Uniswap V4 is around the corner right now, and probably stuff like Aave V4, and we see new protocols like Morpho coming out, and Liquidity is coming out with the version V2. So definitely see a lot of like the old OG protocols kind of, they never stopped innovating, right? It might seem like incremental improvements, but we are kind of coming to like a architecture of lending protocols that are much more resilient, much more capital efficient than they were like 3 years ago. So I'm really kind of glad to see that. I think that's gonna like in the future open up a lot more use cases, and kind of even from like security and the capital efficient side, provide a lot more value for the users. So that's something like not even looking at all the like potential other use cases, but just looking at the current use cases we have. I see it like year over year kind of incrementally becoming better and better, and kind of providing more on that promise of like decentralized and transparent finance. So I'm really happy about that.
Yeah. Makes me really excited as well to see all this progress. And then to wrap up, what's next for DeFi Saver? Like, what are the big milestones you're looking at in the coming months?
So currently we are all like focused on the safe integration. Obviously, that's kind of a lot of work for us to have like a built-in safe support, and have the safe wallet work with everything we have currently, and with other stuff we want as well. So that's kind of our immediate focus on providing like the best safe integration into any DeFi app. Besides that, we are definitely working a lot on like small quality of life improvements, but stuff like better P&L, like better profit and loss. So better providing better information for the user. So a lot of like different UX changes where the user will get kind of better info. With the latest safe integration, we are thinking on how can we actually provide like better like power features on top of safe as well, right? So one of the things we are working on is also besides just like automating different stuff, even sending like transactions for the user. So with the safe app, obviously you can just sign your transaction, and anybody can send that transaction to be executed. So we are providing building a service that's going to provide for the user kind of a way for them just to like sign their operations, and we'll handle the complexities of actually like sending it to the blockchain and paying gas for it, and watching out for MEV and failed transactions and so on. So kind of trying to simplify the user experience, and also provide like better security features of having a multi-sig, and that multi-sig is like built in and works really well with the app, because that's kind of one of the common problems is everybody's kind of pushing for the users to have better security and to use stuff like multi-sigs. but it's not really easy.
Well, Nenad, thank you so much for taking the time. This has been super interesting. Love learning about DeFi Saver. Excited for the new safe integration. And yeah, we'll be covering everything at the Defiant. Thanks again for joining me.
Thank you. Thank you for having me.